Everybody to the SaaS Sales Tax Bootcamp. This is a topic that we get super excited about, so we hope you are too. Sales tax can actually be really fun, so I'll try to guide you through it today and not scare anyone away with sales tax as our topic. So let's get started. All right, who am I? So I'm Lizzie Greenberg. Great to be here, really thankful to be here as part of the Insight family. I'm the CMO here at Techstar. I've been here a little over 3 years working in SaaS sales tax and e-commerce sales tax. I have experience running my own e-commerce company and filing sales tax returns in both California and Texas, which are two kind of nitty-gritty places to file for many years. At Techstar and as part of owning my own business, I've talked to thousands of online sellers, pros, auditors, states. So we have a lot of information to share with you on what we've learned about managing sales tax for a business. I'm excited to be here to share it with you. Just as a note, I am not a CPA. We at Techstar are not CPAs or a consulting firm. So we're here to help you make informed decisions and to talk generally about some guidance that we have, but we're not here to make specific advice or CPA recommendations. All right, so today what we're going to cover. So I'm going to talk a little bit about Techstar, who we are, very briefly, just to let you know why we're here and why we have the authority to talk about sales tax to you today. I'm going to go over some sales tax basics, so the 101 content of what sales tax is. If you've heard about Wayfair, we'll talk a little bit about that and break down kind of the mystery of what is Wayfair if you've been hearing people mention that. We're going to talk a little bit in depth about SaaS product taxability. So is your service actually taxable and how do you figure that out? We're going to go over some steps to compliance. I have a leave behind that we'll share with you that will help you guide that conversation within your own business. And then lastly, we'll talk a tiny bit about how to file a return and how Techstar can help you automate that entire process. So, and then we'll happy to end with a Q&A. And if we have any other questions following that, we're happy to answer those after the webinar as well. So how we want you to feel. So we're certainly going to cover those topics, but we want you to feel confident in your requirements for sales tax after this. We know as a SaaS business owner in the technology or finance field, you're probably not excited about sales tax, and it may be something that's causing sales tax headache is what we call it. So we want you to figure out what you need to know to move forward confidently in sales tax today and kind of what the basics are. We also want you to be clear on the steps to compliance. So what you actually need to know and how you need to, how you can break this down for your company and making sure that you understand sales tax and can explain it to your teams. We also want you to be knowledgeable on resources and where to ask for help. So we're going to provide some resources throughout this presentation, and at the end, we'll recover those resources as well. We know that after today, you're not going to be an expert on everything sales tax. Sales tax is constantly changing. It's a crazy, wild field, and so we want you to know where to go to ask for help so that you can make the decisions that you need to make and aren't going to get stuck. And then lastly, you want to make sure that you're informed on automation. So knowing what automation is, and after you understand what sales tax is and your requirements, knowing how you can choose automation if it's right for your business to help you completely make this a piece of your day-to-day that isn't causing you a sales tax headache and is really a smooth, automated part of your business. All right, so getting to know Techstar, who we are, why we're here, and why we are talking to you about sales tax today. So here's the Techstar team. As of a few months ago, we're growing really fast. It's a great place to work, and so come join us. But we're on a mission to make e-commerce easier for everyone. So we're a completely kind of fanatical group of technologists that are solving sales tax. So what does that mean? Who we are, kind of what we're doing as a company. We like to talk about how we're different and how we kind of approach sales tax and how we offer our solutions. So we're a technology company focused on sales tax. We're not a sales tax company trying to figure out technology. Again, we're not a consulting firm. We're not a heavy CPA firm. We're really a technology company that's solving sales tax as our main problem, and we're passionate about that. We're the only mid-market solution that truly solves multi-channel sales tax in a single platform. So I'm going to break that down real quick. What does that mean? E-commerce today, whether you're selling retail goods, SaaS goods, any kind of commerce going on online, typically you're selling across multiple platforms. You may be selling as a SaaS business on your own website every month. You may also be selling on third parties like app stores or plugins or extensions. We take all of that information and combine it into a single platform. So Techstar is your view of everything sales tax. You're not needing to combine different platforms into one. We're the most reliable API in the market for sales tax. So you can look at our status page, see our guaranteed uptime as well. But we're really proud of our API and the technology behind who we are at Techstar. We offer flexible, transparent pricing with greater affordability. So, you know, our pricing is probably more familiar to you than to your pricing. So typical modern SaaS pricing where we have monthly, we have annual plans, really transparent and flexible to meet your needs. We're built on a modern technology stack. We're Ruby on Rails shop. We also offer the industry-leading API documentation. So if you guys are coming from SaaS companies, coming from the technology angle, or even the finance angle, it's really important to understand how our API works and how you can build into it. And so our documentation is something I definitely like to call out because it's industry-leading to help you understand how we work. We're a 100% remote team, as I mentioned before. That means essentially greater cost savings for you guys. So you're not paying for our beautiful offices overlooking the water. We're 100% remote within the US, and we're all super dedicated and passionate about being here at Techstar and working in the sales tax space. What that means to you is also that we're easy to work with. So we're all a happy bunch enjoying working at Techstar. And that means that when you talk to our sales team, when you talk to our customer support team, everybody is happy and really gets joy out of helping you handle sales tax. And so it's a really great experience that we like to talk about. So we're all truly passionate about sales tax and excited to be able to share this education with you. We've been around for a few years. We offer two main products, that is Basic and Techstar Plus. So we'll talk a little bit about that as we go through. This presentation is all going to be about Techstar Plus and what it offers. And as Christina mentioned, that we are really proud to be part of the Insight family. We took our Series A in January of this year, and it's been a wonderful partnership working with Insight partners. So that is why we're here talking to you today. We support nearly 20,000 customers today, a number of high growth SaaS companies as well. So really proud of that. And we support pretty much all areas of e-commerce. So anyone doing commerce online, whether it's an e-commerce large brand, a retail brand, if you're a marketplace, starting your own e-commerce kind of marketplace for different consumers, if you're a solution partner building in e-commerce website, or if you're a SaaS company that needs help with sales tax, we've got you covered. All right, so let's get started into what is sales tax and why are we talking about this. So one of the most common misconceptions around sales tax is that it's similar to income tax. And I'm going to talk a little about the reasons why and kind of demystify that a little bit. So the first thing to remember about sales tax is there's no single governing body. So there's no IRS that handles sales tax. Sales tax is handled at the state level. And so it's a little bit more complicated, and it kind of creates a little bit of an opportunity for the wild, wild west, which we'll talk about. But there's essentially 46 different states that have sales tax obligations and requirements. So if you look at the map here on the right, the green is all the places where there's state sales tax. Gray is where there is no sales tax. Alaska actually doesn't have a state tax, but has local taxes. But essentially what this means is because it's handled at the state level, the states have their own authority to actually define what sales tax mean in their state. So in Texas, clothing might be taxed normally, whereas in New York, clothing is tax-free under $75. So each state decides how they want to handle taxability for a certain product and then creates their laws and legislation around that. So they can define what is Nexus in my state, which means what is the requirement for sales tax obligation in my state. But they also can define what is taxable. And from a software perspective and a SaaS perspective, this gets really, really tricky. They'll also define what the rate is. So if something is taxable in that state, what is the rate? And this is probably the most common thing that people understand about sales tax is the rates can be different. Pretty much every state, if you travel around the country, you'll notice sales tax rates are different and you don't think a lot of it. But really that's because the states are defining what the right rate is for their own state. And then lastly, one of the complicated parts in the compliance end are due dates. So there's no April 15th, there's no unified date when all of your sales tax returns are due. Sales tax is actually, each state will assign you a frequency. They may say you need to file monthly, quarterly, annually, etc. And so you may be filing monthly in Texas, quarterly in Colorado, semi-annually in California. It can be all over the place, and every state can choose a different day of the month. So sales tax can be something that is a joy that you may have to deal with every single month in all these different dates versus assuming that it's something where it's like an April 15th single deadline. So this is important to kind of set the stage for because it explains a lot of kind of why sales tax is complicated and why you might be stuck or frustrated around sales tax. It kind of all stems down to this, is that it's at the state level and it provides for a lot of chaos. So the biggest thing to understand about sales tax as well, especially for a SaaS company, is that it should be a pass-through tax, and it is a pass-through tax. So you should essentially be collecting the sales tax and passing it directly to the state. It's really best not to pay out of pocket. This is a best practice that we recommend. There are certain scenarios where you may end up having to pay out of pocket if you're looking at paying back taxes, but generally sales tax should be paid by your customer, line itemed out in your service, and then directly paid to the state. So you're just referred to as a collection agent. So it shouldn't be something that's taking into your margin or affecting you as a business in terms of your profitability. It really should be just on top of a pass-through. So the first question is, when do you need to comply with sales tax? So when you see that map of those 46 states and you think, oh no, I need to collect sales tax in all 46 states. The biggest thing to remember is that you probably don't, first of all. So trying to figure out where you have to collect sales tax, the first thing to understand is called sales tax nexus. So you may have heard this word. It sounds a little bit scary, but it's really not. A nexus, all it means is that you have a requirement and a responsibility to collect sales tax in a state. So if you have Nexus in a state, which we'll go over that in a moment, and your products are taxable in that state, then you're required to comply with the sales tax laws of that state. So if we think about the map in the beginning, if you only have Nexus in Texas and SaaS is taxable in Texas, then you really don't have to worry about Texas. If you don't have Nexus in any other states outside of the one you're talking about, then you don't have to comply, and that's okay. So you're not probably going to have sales tax Nexus everywhere. Depending on your business size, you may. But most companies, especially companies that are starting out in kind of the growth mode of SaaS companies, are probably not going to have Nexus in every single state. So what is Nexus and what gives you Nexus? So these are some of the common triggers of Nexus that we commonly see. So generally, a lot of this has to do with physical location. And this is where sales tax was kind of based. And we'll talk a little about economic Nexus in a moment. But generally, for physical presence can give you Nexus with things like an office. So even if you have a home office where you're working from your friend's garage, any kind of physical location in a state where it's your office or it's your home base, that's going to give you Nexus. So start there. You automatically have Nexus in a state because you have an office. Things like if you have a warehouse, if any part of your business has networking or infrastructure and you're storing those in warehouses or have inventory, that is going to give you Nexus as well. Anywhere you're storing inventory or have a warehouse is going to give you Nexus. If you're running any kind of temporary business in a certain state, sometimes trade shows and events can give you Nexus in a state, depending on how long you're there and what you're doing there, and if you're selling versus just exhibiting, etc. There's some trade show Nexus that you can get. Affiliates, employees, drop shipping is probably not super relevant for this audience, but you never know. So the most common things as a SaaS business owner you need to look at are employees, economic Nexus, and trade show and events. So let's talk about economic Nexus for a moment. So this really is something that came about with Wayfair, and we're going to dig into what Wayfair is. But economic Nexus is it's one of the main triggers of Nexus that has nothing to do with your physical presence. And so how did we get here? Let's back it up. So economic Nexus really came from a court case last year of Wayfair versus South Dakota. And Wayfair versus South Dakota was a Supreme Court decision that came out in June of last year. And so we're on the kind of 1 year anniversary last month. And it really established a presence for economic Nexus. And so why did this come about? What is the kind of short story on what Wayfair was, if you've been hearing about Wayfair? Essentially, up until this point, pretty much everything sales tax related had to do with physical presence. So you had physical presence, do that inventory or do that office or do that employee. And it was pretty non-disputed that physical presence gave you sales tax Nexus. What's been happening is, as you've seen the growth of e-commerce and of the growth of retail, a lot of folks are moving online, a lot of commerce is happening online, the growth of SaaS, the growth of a lot of online commerce is happening, and the states are missing out on sales tax revenue. And so trying to figure out a way that they can get revenue is what happened in this case. So in 2016, South Dakota passed a law that required any online business, whether they had physical presence in their state or not, to collect sales tax if they made more than $100,000 in gross sales or over 200 sales in a year, so 200 transactions. This is into South Dakota, not in total. And so they did that, and then they followed up and they sued Wayfair, Newegg, and a couple other e-commerce retailers that didn't collect South Dakota tax. This went up to the Supreme Court, took a long time. Eventually, the Supreme Court ruled in favor of South Dakota, which was a landmark decision in the sales tax world, because what it did was it established that you can have no physical presence. You could never have stepped your foot into a certain state, and now you have a sales tax obligation there because of your economic activity. So South Dakota was saying, even though you've never been here, you don't have physical presence here, you're still using our state's resources, you're using our roads to deliver your product, or you're using some kind of infrastructure of the state that makes it sense that you need to pay sales tax to our state. And this essentially launched the next wave of the wild, wild west in the sales tax world. So it made this concept of economic nexus constitutional. And so this is really important for SaaS companies for understanding that you may have a very small footprint in terms of your physical nexus. You don't have inventory. You don't have, a ton of employees, maybe a lean team all working from a garage. But given your growth and your revenue, you may actually have economic nexus in a lot more places probably than you'd like. So what's happened with economic nexus is, again, this isn't something that's rolled out across the whole country in a uniform way. Economic nexus is something that's been rolled out at the state level. So each state has defined what economic nexus means in their state. So this is a fast changing environment. I'll be honest with you, I think we probably change our economic nexus updates maybe weekly, if not daily sometimes. This stuff is changing all the time and it's really, really new. And so it's really important to keep an eye on it. And our blog tracks all of this. So if you're interested in knowing exactly what's going on in economic nexus, go to the URL below or just go to the TaxStar blog and you can see all the information. So 42 states today and counting have adopted economic nexus provisions. I'll show you a little bit what those look like. But it's probably going to be all the states very soon because this is a great way for states to expand their amount of sales tax revenue given the Supreme Court decision. So here are 3 examples of what economic nexus laws are. So if you're new to economic nexus or you've heard about this and don't exactly know what it means, like why is it complicated? So here's an example, California. Their threshold is $500,000 in a year in gross revenue on the previous or current calendar year's sales. This actually is a revision already. This law has not even been out for a year, but they previously had a transaction count and removed it. And they also changed the revenue amount. So again, these things are changing really fast. So California chose to just go with the revenue amount and no transaction. In Connecticut, their threshold is lower. It's $100,000 a year. And you need to also have 200 or more separate transactions on the previous calendar year's sales. So this is getting a little bit more stringent. They want to make sure that you have the revenue and the volume. In Illinois, they use a different logic of or. So they're saying it's $100,000 or 200 transactions in the previous 12 months. So again, there's a lot of really nuanced things you got to remember with these economic nexus provisions, where is it last year's sales? Is it last 12 months? Is it trailing? We keep track of all that for you, but this is really why Wayfair has caused such a commotion within just overall the e-commerce space and anyone doing commerce online, because it's really, really difficult for a business owner to understand these, follow it, track it, and be compliant. So what have we done about that at TaxStar? Obviously, back to our mission, we're here to make sales tax easier. We're here to make e-commerce easier for everyone, and we're doing that by solving sales tax. So right after the decision came out, we came out with this tool called the Sales and Transactions Checker. It does just what it's called. It tells you exactly how many sales you have in a state and how many transactions. So you're able to see exactly where you have economic nexus, given all of the actual requirements with the calendar year and the look back periods. We've coded all of it into our app. So all you need to do is upload your transaction data into TaxStar. We tell you where you have economic nexus and we'll help track it. And there's some features coming soon to be able to notify you if you're getting close to economic nexus in a state. So there is a tool out there. It's completely free. You can start a trial and use it. It requires no credit card to be able to use it, but check it out, because economic nexus is certainly a piece where you probably don't want to be sitting there doing it in Excel, because it's not fun. Again, I mentioned these laws are changing fast. So sales tax is as slow as the industry has been. It's changing really, really fast. So there's some things that we're seeing. So overall, we see that notice and report laws are going away. So notice and report laws are very similar to an economic nexus legislation, but it allowed the merchant to either comply with sales tax or to report to the state every one of their customers that they did not collect sales tax on, and the state could go after the customers for that missing money. These are really like antiquated laws. Certain states have them. We're generally seeing them go away. They're really complicated, and it's a really bad customer experience as well if a business were to choose to just give up all their customers versus collecting the sales tax. So notice and report laws we're seeing are going away. We're also seeing a move for transaction counts going away. So the transaction counts really make it difficult for a small or growing business. If you're selling something that's 10 cents and you sell 200 of them, you can then have economic nexus in certain states. And so it's making it increasingly difficult for people to figure it out. And also it's just really difficult for smaller sellers. So we're seeing transaction counts be eliminated and new provisions be written. So again, these are like a lot of these are barely even a year out of being live as actual economic nexus laws. And again, they're already being revised. And then we're seeing more states adopting economic nexus. So in the beginning, there was 10, 15, 20, like what I said earlier, every single week, day, month, there's always something new going on with an economic nexus. It's important to keep track of. And so for example, just this month, there's some laws that came into activity. So Arkansas, Idaho, New Mexico, Pennsylvania, Rhode Island, Virginia, and Connecticut. Those were all different economic nexus thresholds that went into effect on July 1st. So how do you keep up with it? You certainly have the economic nexus checker, but also you really, at this point in the game, everyone needs to lean on some kind of technology partner and some kind of research partner to help manage this, because as you can imagine, this is not something you want to do in-house, and it's not something that it scales to have one person doing this at every company. So let's take a step back. Should you be worried as a SaaS company? You know, all this stuff is happening, all this stuff is changing. I want to kind of set the landscape for kind of what's realistic here, and how scared should you be if you are scared. And the answer is don't be super scared, because this can all be automated and all be simplified for you. So at a high level, sales tax liability, you know, reality check, it is a risk for your business. You should manage it like a risk. We've seen a number of cases where sales tax outstanding liabilities can actually break an investment or a sale. So if you're trying to raise money, if you're trying to have an exit for your business, it's more and more common these days to have sales tax actually be a barrier to that. So it's really important as a SaaS company and as a high growth SaaS company to make sure that you're compliant here, so that when you have that wonderful unicorn moment, it's not ruined by sales tax. High growth B2B companies are more likely to be audited, and this is because you're selling to other businesses. If the state is auditing a business and then they're looking at the invoices of your company that's being sold to them, or their service is being sold to them, and they see that you're not collecting sales tax on your invoice, then they are likely to come audit you. So it's a trail. So if you're selling in B2B, you have a little bit higher of a likelihood of being audited, because that's just an easy place for them to find the next customer to be audited. Another thing is that if you're in the news a lot, if you're a high growth company, that can be another trigger for the states to find you. States can come after you personally. So for any kind of leaders or owners of the company, sales tax is not something you can brush off with a bankruptcy. They can come after you personally for the sales tax liability. So it really is kind of a nasty thing to be ignoring and not work on figuring it out. As I mentioned earlier, you may end up paying out of pocket with penalties and interest. So if you choose to not handle sales tax and you eventually get audited, you're going to pay a lot more than if you had just paid the sales tax. Again, this is going to impact your margin and impact any kind of potential sale or investment. You may need to fork up a bunch of money for the penalties and interest. So it is something you can settle up with the state, but you may end up paying more than probably is needed unless you are complying. But overall, states have their hands full with audits. You know, as we all know, there's not unlimited resources in the government to be able to audit every single customer out there. So what we recommend is ensure that you're in compliance, reduce your risk, and focus on your growth. Don't panic. Don't sit around worrying about sales tax all day long. Just cover your bases, understand what you need to do, and then move on, and trust someone like TaxStar or another technology provider to help make sure that you're checking all the boxes. But don't let this keep you up at night, because it doesn't need to. All right, so that wraps up the basics of if you haven't ever heard of sales tax, or if you're just now getting into sales tax, that's what you need to know. So now you know where you should be charging sales tax for your business, how to understand Nexus, how the laws actually apply to you, what is economic nexus, what is Wayfair. You're intelligent enough to have a cocktail conversation around Wayfair. And now let's talk a little bit about for SaaS, how do you figure out if your service is actually taxable? This isn't as black and white as selling something like clothing or food or groceries. SaaS is really complicated, and so we get it. So before you start, if you're feeling stuck or if you're feeling like this is a point of frustration, you're not alone. The best SaaS companies get stuck on this. And the reasons why are the existing statutes and laws are just not adequate for taxability of new products and services. A lot of sales tax was created for a brick and mortar landscape, and you're not selling brick and mortar. You're not selling clothing and groceries. You're selling technology products and services and contracts that the state's never seen before. So there's a natural lagging of the actual legislation that supports what you're selling as a SaaS company. There's also no standard definition of what software is and how software should be taxed. So we'll talk a little bit about what exists today and kind of give you some guidelines around that. But again, there's not just one category that says, hey, this is your business and this is where it falls, because there's just so many different ways that SaaS companies are charging and selling products today. So as I mentioned, the new technologies that you guys are offering, which is amazing, and building our businesses forward, they've blurred the lines around sales tax. So technology contracts can often include the sale of tangible personal property. services, and maybe a license to use intellectual property. So this is not just one or the other, it can be a blend or a bundling. So it can get really confusing. So I'm gonna help you try to break it down, but just know that you're not alone here and it's not something that you just haven't spent enough time on. The actual space itself is really, really complicated. And so it's still catching up with technology and the pace of technology. All right, so where do you begin? How do you start? Where do you even go from here? So there's 3 key questions that should help guide you. The first one is to figure out what you're selling. So it may seem simple, but the biggest thing here is to figure out, is it tangible personal property or not? That's kind of the golden rule around sales taxes. Is this a tangible personal property that can be taxed, or is it exempt? So we'll talk a little bit about what that means when you figure out what you're actually selling and how the state kind of views software in that lens. Then we'll talk about how will it be delivered to your customer. So this may seem simple. You may say, the internet. But in terms of how the government is viewing this, it's really tricky whether or not it's delivered to your computer and stays there on your hard drive, whether it's accessed via the cloud. There's taxability issues relating to how it's delivered that we'll go over. And then lastly, the biggest complication is what states will you sell it in, and do you have Nexus there? So once you figure out, okay, I'm selling this and I'm going to be delivering it in this way, now where are you going to be selling it? And is it taxable in those states? So we'll break down those 3 things. So at any time, try to go back to these 3 questions to help guide you figuring out, okay, let's take a moment. What are we selling? How is it delivered? In which states will you sell it? Okay, so what are you selling? So we're all selling software as a service, but unfortunately, it's not that clear to the state. So there's a couple different popular areas within software that you'll see when you start to look at any kind of legislation around sales tax and software and sales tax for SaaS. And so I want to familiarize you with some of these terms. So the first one is custom software. So generally, this is when you have a developer modify a piece of software for your business. So say you need an integration into this product and you hire a contractor and they come build it and you finish it. If the end work is a professional work product, generally, that is not taxable. You should not be paying sales tax on that work, generally. If you're actually using that integration and going to sell it for your, you're going to go resell that to different other companies that also need that integration, that would be a taxable event. So it really depends on how you're using the work and what the product is, but generally, custom software is not going to be taxable in most states. Again, always edge cases. There are certain places where enterprise SaaS can be considered custom software in certain states. The next area is called pre-written or canned software. So a lot of these terms can be used interchangeably for the most part. So pre-written or canned software is really off-the-shelf software that cannot be modified beyond its original functionality. So canned software, generally, a lot of states will include SaaS products there, and most will deem this as tangible personal property. So take a look at what your actual business is. How are you selling services truly? Are you selling software? And how it actually figures out. And the last one is cloud computing. This is not a category defined in every single state, but certain states are starting to define this. So it does help when this exists in the state that you are looking at. So that can relate to software as a service. So woohoo, one category that's specific, platform as a service and infrastructure as a service. So the taxability for these will vary by state, but if it's listed as cloud computing, it's definitely helpful to be able to figure out if SaaS is taxable in your state or not. There's other areas that are important to take a look at too, depending on what your business is like. There's data processing services, information services, digital automated services, technology licensing, intellectual property. These are all kind of other areas that are defined within the software category that, depending on what your business is selling, are important for you to be aware of and figure out if you have to adhere to the taxability laws relating to those. And as I mentioned, the challenges are that cloud computing is not often defined in every state. Some states canned software include SaaS, and some states custom software includes SaaS. So the goal of this is to help you get clarity. So how do we do that, and how do we actually go through all the gray area here? Here we go. So how to get a definitive answer. So there's 3 things you recommend. First, check your contracts. Check the terminology that you've used. Maybe your legal team has referred to your product as canned software or custom software. Take a look at actually how you're defining. And if there's something different, or if your service is truly something different, explicitly define it in your contracts. So be clear. If someone is looking at your contract to figure out how it should be taxed, be clear about what you're actually selling and align it to a sales tax that you feel is you should be taxed on. The second is ask for help. So we say this all the time. We're not CPAs. We're here to give you the advice, but it's really, really helpful if sales tax is something you're just getting started with, to consult with a CPA that has sales tax industry expertise. So I'll put some resources at the end. This deck is going to be shared, and this links out to our CPA resources, but we have a few vetted CPAs that really understand sales tax and understand sales tax online and for SaaS, so we can really get you in the right hands to help you get a consult to figure this out. The last one is to request a letter ruling from the state. So if you feel like you understand, hey, in my state, my business should be taxed in this way, and this is why, you can request the state to give you a ruling. So you write to them and say, hey, here's what I think, tell me yes or no. And this is a long process, as you can imagine. It can take 6 months or more. But if you get a letter ruling back from the state, and a lot of times these are public after they've been redacted, but they'll be public so other people can take a look at letter rulings and make a decision for their own business. But if you receive a letter ruling from the state that gives you a decision on how your business should be taxed or how a scenario should be taxed, then you can use this in any kind of legislation moving forward. So if you ever get audited, that letter ruling protects you if for some reason that ruling is different than what the auditor thinks. All right, so that's how you get a definitive answer. So I'll give you more resources in a second, but these are the places. If you're still feeling stuck, you still don't know where to go, ask for help, get a letter ruling, and make sure that you're talking about your product the way that you think it should be taxed. All right, so the next area is how do we actually deliver the product? So how do we deliver the product to the customer? So these are some common ways that you can deliver software products. One is tangible. So CD-ROMs, good old CD-ROMs, floppy disk, USB. If you're shipping someone every month a CD-ROM or an update, that's tangible software. Pretty much no question that's going to be taxed because it's something that is tangible personal property. It gets a little bit trickier with downloadable software. So it depends on what you're selling and how you're selling it. But if you're downloading something that installed on a local hard drive, a lot of times that can be regarded as tangible personal property as well. It's virtual property, but it is installed hard on the actual computer that the user is using. The next is cloud-based software. So a lot of SaaS companies will fall into this. So where the software is actually accessed over the internet in a remote capacity and there's no downloads. So cloud-based software sometimes is lined out in different states around taxability and not. The resources that we'll share with you around SaaS specifically are going to look at cloud-based software. So it's important for you to be aware of the other areas in case you are selling, for example, cloud-based software, but you also sell CD-ROMs, then you need to make sure you're aware of both. There's other different styles of delivery that can affect software companies and some SaaS companies. Those are referenced here. Leave and load, that's where you upload the software and then you remove it. So you're leaving it or you're loading it and then leaving. There's software keys. So if you're selling license codes and software programs, there's different taxability rules kind of on the keys. And then there's on-premise. So if you're installing the software in a specific location or you're doing multi-state premise installation, there's also specific tax treatment based on that. All right. Okay, so this is the last thing. So putting it all together. Step one, we understood what we're selling. Step two, we understood how we're going to deliver it. And step three is, okay, and what states am I going to deliver it? So if we put all that together on a map, this is what it looks like. This is a wonderful map from the Tax Foundation. To me, I feel like the emoji when I see this because this is painful. This is painful to understand triangles, stars, squares, etc. But this is what it's like in terms of all the different software mapped out. Again, we're trying to simplify it here. We're trying to make it really, really relevant for SaaS specifically. So this map again is software and talks about all the different software. But if we're just looking at SaaS, we've created a map to tell you exactly what are the states you need to be aware of in terms of taxable and not taxable. You can find this on our blog, taxjar.com/SaaS. If you keep it all lowercase, that will take you to this map. We're always updating that post with any kind of information. If you lean on us for the research, we'll tell you exactly where it came from. So we break down every single state that we have there where SaaS subscriptions are taxable, and we tell you why. So if we reference the letter ruling, we'll reference it there. If we reference the state's website, a different piece of legislation, it'll all be there. So you don't have to sit down and do all this research from scratch. We've done a lot of it for you. It's really important though to make sure that this is accurate to your business. So if you're selling subscriptions, this is the most accurate for you. If you're selling, again, USBs or CD-ROMs, you really need to make sure that you go deep and make sure that your taxability for your SaaS business is comprehensive of what you're selling. But if you are selling just subscriptions, this is a really great resource for you, and we'd love for you to use it. And so why is this important? Why is understanding your product taxability important? Why is figuring this out? What does it allow you to do? So understanding what your product taxability is enables you to take the first step towards automation. So for example, if you were to use SmartCalcs, our sales tax API, for your SaaS business, if you were selling subscriptions, you would tell us the code of your product. So you tell us, 370, which is software as a service for our system. And then anywhere that you are going to charge an invoice to your customers, or anywhere you're going to charge a sale on your website, we'll do that for you, and we'll make sure that we're charging the right rate where you have Nexus. So you set it up within TaxJar, you set it up within our API, and all of a sudden you never have to worry about, hey, all of a sudden did SaaS become taxable in Michigan, or did it change in Texas? We keep up with all the rates, maintain all the codes and research, but we need you to help us with that first step to tell us what those product tax codes are. So that's why this is important, not just figuring out for your business, but it enables you to take that first step towards automation and understanding what your product taxability needs are and how it will map to certain software companies' capability like TaxJar to be able to charge the right amount every time. Okay, so wrapping up, we're getting really close. Steps to compliance. So there's not a lot here. I'm going to leave you with some leave behinds because we're going to try and keep this brief. So steps to compliance, once you figure out where you have Nexus, what you're selling, what's taxable, you've got it all down. Now, what does this actually mean? How do you do this? How do you sit down with your team and actually go from 0 to 60? So we've created a checklist for you. So this checklist pretty much goes over everything we've talked about, from understanding your business and where you have Nexus, to determining your product taxability, setting up infrastructure, implementing, you got to make sure you talk to your customers about this. If you haven't been collecting and now you are, that's going to be a change that people will notice in their invoice. So what's your marketing plan for that? What's your customer support frontline process? Making sure you're checking all the boxes so that you are rolling out sales tax collection in the best way possible. And it also covers any kind of automation or compliance and remittance. So there's one side of the house around the finance or on the technical side that generally helps with the collecting the right rate, setting up the API. But then the other side of the house, more of the finance team will be concerned with, when are our returns due and how are we filing them and how are we taking all the information from our app and actually getting that to the state. And so there's two teams that usually have to work together on this, and we're happy to help provide this checklist so that you can kind of have that conversation and make sure that you're covering all the different bases. So you can reach that at taxjar.com/SaaS. It'll email it to you instantly. We'll also be sending it as a leave behind from this webinar too. So if you don't get this link now, it'll be sent to you. The biggest thing when you're thinking about compliance is that you have to register before collecting. So if you're eager, if this presentation has inspired you to go collect sales tax, don't go do it, because you have to register and tell the state you're going to collect on their behalf. You can't just turn it on tomorrow and then start remitting. You have to get a sales tax license from the state, and that will tell the state, hey, I'm going to be a collection agent for you, and I'm going to start collecting sales tax and remitting it. And the state will give you back the frequency of which they want you to return things. They'll say, okay, you need to give us sales tax monthly or annually or semi-annually, quarterly, etc. So you'll get all the information that you're wondering about sales tax and remittance once you register. The question we get most often is kind of when. And I think it's really important to kind of approach this as you would any kind of risk element. Your individual risk tolerance should be your guide when you handle sales tax. So how big is your business? Is sales tax giving you a headache? Is it something you're thinking about and kind of cringing? Is it something that, hey, we haven't made our first sale yet, so it's not a problem for us yet? Registering protects your business from longer look-back windows. If you do register and you haven't been compliant for a number of years, the states can at any time audit you for all the way back as they want. If you register, a lot of times it will limit their look-back window to 2-3 years, depending on the state. The look-back windows are different, so it can protect you if you have a really kind of long liability. There's also programs like a voluntary disclosure program where you can work anonymously with the state to try and settle on an amount. If you have a lot of back taxes, you can kind of agree on an amount and move forward. But the key thing is to use common sense, use logic. If you only owe $3 in a state, it's up to you to figure out kind of what your risk tolerance is. A lot of companies probably just want to comply and move on. But if it's something that is causing, a huge pain point, if you're not using automation and doing it manually, is it worth, an hour of doing a return in a state if you're only remitting $3? Maybe you'd rather wait and get audited and pay $10 as a penalty. So use common sense, but again, register before collecting. Don't ever just collect, before that. All right, so just a few slides on TaxJar and how it can help. So hopefully I've explained a little bit about kind of the sales tax landscape, why it's frustrating, why it's confusing, some resources to help break it down. what can you actually do in terms of automation, and how can you kind of make this go away? That's really what our goal here at TaxJar is, to help make this go away. So what we do is we import all of your sales data from wherever it comes, whether it's coming from NetSuite, it's coming from Stripe, it's coming from your custom API. You bring it all into TaxJar. We create this dashboard that tells you every single state, everything you need to know. We tell you, you tell us your frequency and we map it out here. We tell you when the filings are due, and we break down everything that you need into state reports. The state doesn't care where you sold things. The state only cares what you sold in their state. And so this is your dashboard. Reporting, when you actually, if you're on the tech team and you're thinking it's a really big hurdle to try and get the calculations right, this is a really big window into what the finance team is dealing with, because the reporting process can be an absolute nightmare. So when you report sales tax and you give it back to the state, that process is a whole process in and of itself. And a lot of states will require you to break down the amount you collected by the city, county, local tax district, municipal district, etc. So you can take that $100,000 you made in California, but that might end up being a 6-hour form like this. And so TaxJar, what TaxJar reporting is and what sales tax reporting is basically automation. We do all that because we did the calculation, or because we're importing your data and know exactly what was calculated. We create all the reports for you. You can have your team look over this and file it on your own, but the most common thing is to let us file it for you, so you just fully automate it. So it's called AutoFile. It's bulk pricing based on how many filings you're doing. It starts at 25, but it can get as low as $9 a state. And then your return, payment, everything is remitted directly to the state, and you never have to worry about it. We archive your returns. You can go check and see what was filed. And then if any issues happen or anything like that, we help manage that with the state. So what that can mean, as I mentioned, each state can give you a different filing frequency. So if you're a SaaS business filing in 3 states, you may have one that's monthly, which means on the 20th of every month you're filing. You may have another one where you're a quarterly frequency, where you're filing on the last day of the month. And then you may have one that you're annually. So you're managing, essentially all these check boxes are just the due dates that you have to manage as a business. And so that's usually why most people choose AutoFile, because they don't want to manage this and don't want to have all these calendars. And especially, as you can imagine, this is 3 states. As you grow in your Nexus, it gets extremely complicated. And then certainly I talked about earlier, but just want to reiterate the economic Nexus checker. So this really helps you break down, even if you're not collecting today and you're trying to get your hands around it, use the checker. It's free, again, like use it and see where you stand, because you may not know, and it just breaks it all down really easily for you to say, okay, this is where I stand. I know that I, don't have any Nexus here, or maybe I do, but it helps give you kind of a perspective on where to start and where you have Nexus. And you can also use it to manage it based on your risk. If you want to start complying only in the, Vermont, for example, because you have a high liability and maybe you want to wait on Maine, totally depends on your risk tolerance. We certainly don't recommend not complying, but it helps you kind of get the data that you need to make the right decisions. And then lastly, I already talked about, but our SmartCalc sales tax API allows you to, anything you sell that we support the product taxability for, will automatically charge the right amount at your point of sale. So whether that's in a solution, if you're like a WooCommerce subscription user or any other platform, a lot of them that we are embedded in, or if you have a custom API, you can build into it. And then that lets you take all the research and maintaining tax codes off your plate and just let us handle it. As Christina mentioned, we have the perks from the portfolio discount, so 20% off TaxJar Plus annual plans. So really excited to offer that. We love being part of the Insight family, and we've just been really thrilled at the partnership. So if you are on this call and are looking to take advantage of this, just mention it to our sales team. We talk a lot, we communicate a lot, so there's no real code or anything needed, but just mention that you're part of the portfolio and that you like to take advantage of the discount, and we'll make sure and get that added to any of the discussions that we have with you. And then lastly, the resources. So we have a YouTube channel that has a lot of sales tax education videos. So a lot of webinars like this and other kind of education within the space. So we'd love for you to take a look there. If you need help with registration, so if you need to actually register in new states, there's a link here at taxjar.com/helpme. We'll connect you with CPAs that will help you complete all of your registration needs. Our blog is the most popular sales tax blog on the internet. We're super proud. There's over 1,000 posts on there. Pretty much everything sales tax you need to know. And you can quickly go to that by just going to taxjar.com/SaaS, and that'll take you directly to our SaaS blog post. And then lastly, taxjar.com/findmyCPA. That will get a list of all of our vetted sales tax experts. So you know exactly some people that are familiar with sales tax, familiar with SaaS, familiar with the space, and aren't new to sales tax, and they'll help you get up and running and make any kind of Nexus determinations if needed. All right, so thanks so much. I'm happy to move into questions, but just wanted to share that link one more time in case you had any other questions or wanted to download that checklist. I didn't go through it all on this call, but feel free to download that and go over it with your teams, taxjar.com/SaaS. And then back to you, Christina. Let's handle some questions.
Awesome. So I think we have time for just one or two questions. Please enter them now if you have them. We did have some come in. So does the user have to put in the customer's address, so the city, MTA tax, etc., is calculated, collected, and remitted?
That's a great question. So there's a concept called rooftop accuracy, which TaxJar is rooftop accurate. And so what that means is when the customer puts in the actual full address, we look at the entire address and look at the actual sales tax rate to determine all of those things. It's not just looking at something like a zip code. So if you have just zip code, that's a place you can start, but we recommend getting the full address so that you can actually get the right rooftop determination, because sometimes the zip code rate is not as accurate as the rooftop, and you want to make sure you're collecting the right amount if you're trying to collect. So that's one of the things that's mentioned in the checklist, to just make sure that you're collecting the full address so that you can have all that.
Wonderful, thank you. How do distributed/remote companies like TaxJar manage triggering physical presence nexus when hiring a new employee in a new state? For example, does hiring your first employee in Wyoming require you to collect and remit sales tax in Wyoming?
That's a great question, and love that you might be getting into the remote space. Yes, so hiring an employee in Wyoming would trigger physical nexus in Wyoming. And so having that employee there would mean that you would need to register and start complying in Wyoming. So you manage it like you would any kind of business. If you have a new physical presence, you start registering and comply. The same with employees as you would if you got economic nexus triggered.
Great, now two more. Does TaxJar handle use taxes on purchases?
That's a tricky one. I would recommend setting up some time with our sales team to talk specifically. I admittedly am not an expert on use tax. Generally for SaaS, to my limited knowledge, the use tax rates are not really that different than sales tax rates. So there's not going to be a ton of difference, but I'm going to pass on that one because I don't know a ton on use tax. So I would recommend checking out our blog, or also just reaching out to us and we'll just set up a call with one of our experts.
Great. Last question. How is TaxJar different than Avalara?
That's a great question, and one we hear a lot. There's certainly differences in how we go to market and how we are as a business. They've been around a very long time. We're kind of the newcomer. I think that the key is to really think through not just how we're different, but what do you as a business need? So they have a number of integrations that we do not have, for example. But what integration do you actually need? Do we have the integration that you need? Most businesses only need 2 or 3, not 700. So it's really up to you to think through how you as a business are going to need a sales tax solution and which is the right fit. So we focus specifically on e-commerce, online. So if you're running a large brick and mortar store, if you're running freight, any kind of like complicated areas there, like they will be a much better solution than us. But if you're running a SaaS company, if you're running an e-commerce company, we tend to be a really good fit because our technology is built on a modern stack, and also it's just more reliable. So you want to make sure that your uptime and your status and all of that is supporting your business in the way it needs. And then lastly, we love having our transparent, flexible pricing and the fact that we have an amazing support team that we're really proud of. So those are things, but I would say make sure you look at the requirements for your specific business, not just on what the company overall provides, and then ask around, read reviews online, see what other people say, because I obviously am pretty biased towards TaxJar, but it's really helpful to talk to other people within your space and hear what they use and why. So I'd recommend checking that out.
Wonderful. Thank you so much, Lizzie, and thank you everyone who's joined today. Again, we'll be sharing the recording by the end of the day, so keep a lookout for that email. And then as always, if you're a portfolio company of Insight, make sure to check out TaxJar's profile on the Go Network, where you'll receive some discounts. as well as, you'll have the opportunity to share what you've learned today with your peers. So thank you, everyone. Have a wonderful night.
Thanks so much for having us.